going to get Anne-Marie Baiynd coming on here right now. We'll get her thoughts on Twitter as well. Anne-Marie, are you kicking around there?
I am. How are you?
How's it going, Anne-Marie? How's your week been?
Weekend.
Weekend and
Well,
week. We haven't talked to you
weekend's
for a
been,
while.
yeah. Well, it's been good. A little erratic, but never a dull day in the market.
So, Anne-Marie, we're just talking about Twitter here, Joel and I. I'm not sure if you were listening to the conversation, but we're trying to figure out when the bottom is going to happen here in Twitter. And one thought that I just hadn't actually made here yet, but I was going to, was the one thing to consider here is that when you compare Twitter's market cap to some of the, and if you're looking at a social media, comparing to some of the traditional media companies there, I mean, we had a massacre in Viacom last week, and Viacom's market cap was coming down to like $20 billion when it really sold out there last week. Twitter's still sitting here with a market cap. I didn't get the updated numbers, but I think it's around 19. When you compare that to, a traditional media company, is this stock still expensive?
You know, I have to tell you that when I look at a chart, I think what you're saying makes a lot of sense, and I would say yes.
Mm-hmm.
In the end, I think Twitter is, as a chart, it seems to be broken. And so, in real simplistic terms, so I'm looking really to watch this chart bounce, but give back lower levels. It's still got a lot of negative momentum attached to it, and I think there are a lot of trapped buyers trying to pick a bottom. And so whenever that happens, as the bounce comes and it starts to settle in, skittish buyers that are trapped will sell off again. So it's been sort of doing that for the last couple, 3, 4 days. It'll come in, it'll try really hard to bounce, and then when the buyers see it's not holding there, they'll cut and run. But I think a lot of them are caught long all the way from 30 because they're thinking, 30 is going to hold, it's going to be great. And now, yeah, exactly. Right before the earnings space, I think maybe a few of them sort of trimmed at the fat there. But for me, this chart has some bounce potential, but that bounce should fail. No doubt about it. This is not going to be a standard recovery space where it turns around and moves back up. There's no way. Plus, they're broken. I mean, they're physically broken as an entity. There's all kinds of shakeup in there. So something's going to give. So I suspect it moves a bit lower. If you are doing some sort of any kind of fib analysis on it, it's pretty extended, but there's still room for it to slip down, 24, 22. Ooh. That's certainly not out of the question in the long run.
I mean, when you compare its valuation to like the WhatsApp or acquisition there from Facebook, it seems relatively cheap. But when you compare its valuation to obviously traditional media sources, which I just did, I just looked at Viacom's market cap. It's $18 billion. This market cap is $17.71 billion. So this still has a market cap of Viacom. I mean, you see the Viacom billboards out there. Viacom makes a ton of money still, even though, the stock's been beat up here as of late. But it's a cash cow. I mean, now you look at something that really doesn't make a lot. They can't figure out how to monetize. There's so many unknowns here still, and everybody
has exactly right.
Pounding the table here that they think the stock is cheap, but it depends who you compare it to really say if it's cheap or not. So you compare it to Facebook, maybe it's cheap, but I mean Facebook has 1 billion users that understand the product perfectly. I talk to my friends about Twitter and say, why aren't you on Twitter? I like Twitter because we have some followers, Anne-Marie, and we can talk and discuss different things. Business, stocks, for stock market it makes sense, but you start getting away from that. None of my friends get it. My wife doesn't get it. She's on it, but she doesn't use it at all. They're on Facebook. They have their own connections there. So I don't know how you get the people there to get all their friends on Twitter and stuff because they use Facebook for that. So I don't know if the mass population is ever going to really get Twitter.
And that might very well be true. It's it's always down to if you believe that it's cheap at these levels, that really is a question that's relative. How long do you plan to hold that? Is it cheap relative to where it's going to be 10 years from now if it catches hold and it learns to drive revenue? Probably, but if you're looking at things from an intermediate to a short-term perspective, I'm in the camp of this thing being well overpriced because it really doesn't generate the kind of revenue that it should to have these kinds of prices.
Well, what about, I mean, so you don't put anything in the earnings trend, the increase in earnings per share, the increase in revenues, meaning just about every quarter? You don't put any stock in that?
No, that's not quite what I mean. I always look at things in terms of how long am I planning to hold this?
Okay.
And that statement actually puts the relative framework of is this cheap or is this expensive? Over time, those trending numbers are very important. So if I were a long-term holder of Twitter where I said, you know what, 3-4 years from now, this thing is going to have great traction, I'm buying to accumulate, then, we're talking a different game. But for me, I'm looking at things from, okay, where is this thing going to be 30 days from now? Where's it going to be 60 days from now? And those numbers still look lower to me.
Great, great context there to put it in the time frames. We have people, longer term investors. We have some more traders, shorter term swing traders. So putting everything into context. And I think Dennis also, we both talk about long term versus short term. So that's a great point. We have retailers coming out.
1 second, just before you change
Sure.
the point, Zozo in the chat just made a great point here too.
Okay.
I'm looking at my use of Twitter, and he's saying Twitter is good for sports, stocks, and breaking news. And I'm thinking, that is exactly what I use Twitter for. I have another handle that I use where I watch my Oilers hockey, because I'm a big Oilers fan, and my Tigers baseball. So I'm a Tigers baseball fan, and I use it for stocks and I use it for breaking news. And I'm like, you're right. I don't use it for anything else. I don't use it to talk to my friends. I use, either, and I don't use Facebook a lot, but my wife uses, the Facebook. But he's exactly right. It's good for sports, stocks, and breaking news. And maybe there's some other uses out there, but those three things are the reasons I use Twitter. And if you're not into those three things, I don't know.
What else is there? What else is there besides?
That's what life is.
Well, yeah. I mean, come on. I mean, I throw a few other things in there, not on the air, but there's a few other things that you can mention. I mean, the music thing too is what I got Anne-Marie laughing again here. There's a few other things too that they're going to be looking into, and that is the music industry, right? And Beyonce, Chris S. Texas just mentioned that, so that's a big area too, Dennis, and that's a great point. What if they come on and they get what's that country Taylor Swift or something? That she's going to do a concert or I don't know, different. Something like that. I mean, that's right. They need to diversify. So, Dennis, can I move on from Twitter yet here?
Yeah, let's go. I just wanted to get that Zozo point in because it was a great point.
It was a great point, and I appreciate that from Zozo. Going to retail, Anne-Marie, and I just want to know, because I'm going to be looking at some of these retail stocks and earnings, I want to know where you're going to do your back-to-school shopping.
I got to tell you, my kids are so old now that I just give them their money and go, just buy what you need. And if you run out of money, then that's just too bad. So learn to manage what it is that I've given you. So, I'm not in that space so much so as watching. I've seen a lot of retailers not look very healthy to me in terms of hanging on to the spaces, but that's just not a sector that I watch. I wish I did.
It's a tough sector. I mean, you take stocks like J.C. Penney. I mean, they've hit their heyday. They're trying to come back. So yeah, and they also have the monthly figures and whatnot that come out, and you have to evaluate them. But okay, so let's move on to the big dog here in the market, and everyone wants to know whether Apple lost their 200-day moving average. They took out the low from the earnings. What do you think? Is this a broken chart in your opinion, Anne-Marie? Apple?
I think Apple's got some downside. Remember, we had talked about this gap that was sitting all the way down at 113. I had talked about 115. If it recovered there, it'd be a good buy zone. And it's sitting right around that region. Closed there. It's now bouncing into an area that I think is pretty low market auctioning region, so it should come in and chop around there. My thought is that Apple tries to test this 117.70 to 118 area, and it loses again. It's got some more gapping action just below. Remember, when a stock leaves a gap open for a long time, it's sort of like a three-legged chair. And so it's got to come back in and market auction, from a market auctioning perspective, even out that gap in the movement, because nature abhors a vacuum, and so do the traders that trade. And so that's what we were looking at last week. So I actually took this one long off of 113 because I felt like the job the algorithms were working on was filling the gap. It did fill the gap, bounced the region, started to look for it. It's up here in a zone that I really am suspecting that it holds, but it's going to retest it, and it may very well dip lower. This chart has been a measured move. I think it's in a measured move. 121 to 133, 134, something like that. So we're looking like about, I don't know, 12, 13 bucks. And really, that's what we're looking at off of this drop zone. We looked at about 10 or 11 bucks. We might have a couple more coming down. Maybe we stabilize at around 110, but we could really slip all the way down into maybe 107.70 before the chart starts moving back up. It's sat in the zone for much of the year, really since, February. It moved into the 121 area, couldn't get past 134. We talked about that. Sat in the zone the whole time. It fell out. As soon as it fell out of that area, I knew that we had some good shorting action. And so that really has been a pretty tidy trade down to the south. And now, we're done, and it's trying to stabilize up here. I'm going to watch it in this region. I don't expect anything big from a punch forward. I really don't expect it to breach 120 before it fades again. But it does have some fade action attached to this bounce. So we just got to either trade the bounce super short term and then watch it go back, or just wait for the rejection of the 118 area and consider the short. If it brings in a higher low, then the chart's in recovery. If not, it's got further to the south to go.
Anne-Marie, a couple of minutes here left with you. I want to get your overall market thoughts. I was saying before Apple broke down there, I thought if Apple finally broke that 119 to 120 support, I thought the S&P futures would go with it. That has not happened here yet. There's always rotations, always something that seems to be keeping the index alive, the S&P futures up near the highs there. We're still stuck in this 2060 to 2120, 2130 trading range here. We're getting another lift here today. It seems like every time we get down there near support, we just bounce out of it again. Is there anything that's going to bring this market down? Because Apple couldn't do it. So, is there any reason for the shorts to really be saying the S&P futures are going to eventually break down here, or are we just consolidating here and eventually going to move higher?
Well, my thought is that the interest rate shift is going to shake us, and so I've thought from January, because I've been posting since then, from January, February, that I did not think we'd get out of a trading range until September. Now, the pundits are saying, well, maybe it's because of the election cycle. They're not going to do anything to raise the rates, blah, 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 blah. My thought is this. I believe that there is some negative price action being exerted on the market. It's coming. I've been talking about 2090 for a long time, a couple weeks. You see my tweets on the ES. It's talking about that area from the ES perspective. And so that 2090 is sort of where we're jamming our heads up against this morning. We should bump into sellers there. If not, we've got to move into 2099, and the chart is going to be range bound for a time. I think that the rise in interest rates is slowly being priced in, but I think it should give the market just a little bit of a jolt when it comes, and that's going to bring it down. My thought is that we have room to accelerate one more leg to the north, maybe up from the ES perspective into 2135, 2157, but that's basically it. I think if it gets to that space, it should rotate downward and really start to pull in. But until we get this interest rate stuff settled out, I think people are still going to take advantage of cheap money and still going to try and buy these bottoms and keep themselves into the range. Because really, if you've been buying the bottom and selling the top of this wide range, you've been making money through the entire cycle.
Anne-Marie, before I let you go, cover Barron's. Time to buy commodities here. I know you do keep your left eye on the crude and the gold and whatnot, and I'm not sure if you watch any other commodities, but you just want to make a general comment. Is it time to step into the commodities markets?
I don't think so, because if the interest rates come in and we get that hit to the dollar, it's going to bring these one leg lower. Now, that being said, there's a lot setting up for a short-term bounce. I see gold setting up for a short-term bounce into resistance. Oil, clearly another place where a ton of buyers are trapped, but clearly trying to exercise some pressure down here. For the very short cycle, we should see a bounce. But again, the bigger picture we got to keep our eyes on. We've got so much soft action with other currencies that the moment our interest rate rises, we're going to have increased dollar strength, and that is going to exert more pressure on these commodities.
All right.
That's my thought.
Disagreeing with Barron's. There's nothing wrong with that. Anne-Marie Baiynd, author and financial analyst. She joins us every 2 weeks at 8:35 to give us her well-rounded view on the markets, Anne-Marie. Really respect your opinion, your analysis. Thanks for coming on, and we'll talk to you again in a couple weeks.
Thanks for having me. Take care. Bye-bye.
Thanks, Anne-Marie.